Okay, let's dive right in today. We're looking at, well, just a massive figure, $30 billion. dollars.
30 billion. That's the estimated hit, right? The collective loss for both the Kurdistan regional government, the KRG, and the Iraqi federal
Yeah,
government.
exactly, over 2.5 years, because those crucial oil exports just stopped. A huge economic blow.
And if you look at the international oil companies, the IOCs, I mean, they were losing something like $35 million per day in revenue, collectively.
Wow. Yeah, it really puts the scale of this shutdown into perspective. It wasn't just the money either. It pulled, 300, maybe 400,000 barrels a day completely off the global market.
Which creates real instability globally. Definitely a factor.
So after all that pain, financial and geopolitical, the pipelines are finally flowing again. They officially resumed September 27th, 2025. But for you, the listener, the big question isn't that they resumed, but really how. What does this incredibly complicated, kind of fragile, short-term deal, this political truce, really what does it actually mean? For oil prices, for investor confidence, and, for Iraq's future stability.
Right. And our mission today is really to unpack the mechanics of this whole arrangement. It's an interim tripartite agreement, and honestly, it's a bit of a tightrope walk. We need to understand the financing, specifically why they landed on this controversial $16 per barrel rate.
Controversial is right. We'll get into that.
And also the geopolitical side, especially the U.S. role, which seems pretty active here.
Okay, so let's structure it like this. First, maybe a quick reminder of why the halt happened. Then let's tackle the money, the old debt, and this new payment system. And maybe end by zooming in on one key company, Gulf Keystone Petroleum, or GKP, and how they reacted. Sound good?
Sounds perfect. So the context is essential. The halt kicked off back in March 2023. It was triggered by a ruling from the International Chamber of Commerce, the ICC, in Paris.
Right, the ICC ruling.
Yeah, and it sided with Baghdad against Turkey over the KRG basically exporting oil independently. That ruling effectively forced the shutdown of the main export route, the Iraq-Turkey pipeline, the ITP.
And that pipeline used to carry a lot of oil.
It did. We're talking 300,000 to 400,000 barrels per day previously.
So after nearly 3 years of stalemate, the solution is this interim agreement, announced just days before the taps turned back on. It brings together the federal government in Baghdad, the KRG in Erbil, and 8 major IOCs operating up in Kurdistan.
But what's really striking, I think, is just how fragile this deal is. It's only valid until the end of 2025. And get this, the initial term is just 30 days.
30 days, seriously.
Seriously. Automatically renewable each month, but still. That structure, I mean, it screams lack of long-term trust between Erbil and Baghdad. They need the money flowing, but they seem to only trust the deal for, 30 days at a time.
It really does sound more like a ceasefire than a contract. And you mentioned the U.S. roll sources suggest Washington was pretty involved in brokering this. Why?
Well, the U.S. perspective seems clear. They need stable, long-term oil flows, partly to maybe offset volatility from sanctions elsewhere, think Iran, for example, and just generally to help keep global oil prices in check. Predictability is key.
Okay, makes sense. And the companies involved. You mentioned 8 major IOCs.
That's right. Big names like Gulf Keystone Petroleum, GKP, General Energy, DNO, HKN Energy, Shamaran, and others, many part of the Epicure Association. The deal tries to walk a fine line. It aligns them with Iraq's federal budget law, giving Baghdad central oversight.
Which is a big win for Baghdad.
Huge win. But it also tries to preserve the, quote, sanctity of their existing production-sharing contracts, their PSCs. Those very contracts that Baghdad has legally disputed.
Hang on, preserve the sanctity. But didn't the federal court rule against those PSCs? Why would Baghdad even concede that point?
Well, it looks like a pragmatic trade-off. The IOCs likely wouldn't restart flows without some kind of assurance, even a temporary one, about their existing contracts not being immediately torn up.
Ah, okay. So it's political reality. Baghdad gets the revenue control now via the budget law and SOMO, and the IOCs get, a temporary nod that their contracts aren't void, at least for now.
Exactly. It's about getting the oil flowing again, first and foremost.
Let's talk about the money then, specifically the old debt, because Iraq still owes these companies roughly $1 billion in arrears, right? Stuff that piled up since September 2022. DNO alone is owed something like $300 million.
That's the figure, yes, around $1 billion. And this is, frankly, a major sticking point or maybe a weakness in this new truce. The IOCs agreed to restart without that old debt being settled up front.
So how is that being handled?
The agreement just says the KRG and the IOCs have to meet within 30 days of the restart to establish a mechanism for settling those arrears. There's no actual payment guarantee for that $1 billion yet.
Okay, so the payment certainty everyone's talking about only applies to the new oil, the barrels flowing right now.
Precisely. And that's where this escrow account comes in. It's kind of the clever part of this interim deal.
Explain how that works.
It's designed for immediate transparency and security for the IOCs. For every single barrel that's sold, a specific amount, that key $16 figure, gets transferred directly into a dedicated escrow account.
$16.
$16. And that money is then distributed proportionally among the IOCs to cover their costs, their production and transport costs. Whatever revenue is left over from the sale price, that goes straight to SOMO, Iraq's federal oil marketing organization, and into the federal treasury.
That's a massive shift. SMO now controls the bulk of the revenue flow. Baghdad really asserted its authority there, taking over from the KRG's previously independent sales.
Absolutely. It's a fundamental change. And the mechanism itself is quite neat. An independent marketer, chosen by the IOCs, actually handles the physical sale of the oil. They collect the money and transfer it directly to the escrow. This gives the IOCs the direct payment certainty they desperately needed.
And is that $16 rate fixed forever?
No, it's not meant to be permanent. There's an independent audit planned by Wood Mackenzie, actually, to validate the actual production costs for the different fields. Those findings are supposed to be used to adjust the payment rate going forward.
Interesting. So Woodmac will essentially decide if $16 is fair.
In essence, yes. Their audit will provide the basis for future adjustments. The initial $16 rate is set for the first 3 months, with payments expected to start hitting IOC accounts within weeks of the first sales.
Okay, let's shift to the actual oil flow.
Yeah.
The KRG committed to delivering, what, about 230,000 barrels per day?
At least 230,000 BPD, that's the commitment. Most of it, around 180,000 to 190,000 BPD, is slated for export through that ITK pipeline to the port of Ceyhan in Turkey. The remaining 50,000 BPD or so is for domestic consumption within Kurdistan.
And did the restart go smoothly?
Mostly, yes. Flows began right on schedule, September 27th, but there was a little hiccup almost immediately. They had to pause temporarily on October 3rd.
What?
Turns out the storage tanks at Ceyhan were completely full, just a logistical bottleneck from restarting such a major pipeline after years offline. But flows did resume the next day, October 4th. SOMO is now handling the sales out of Ceyhan, selling it as Kirkuk blend.
So what's the global impact of this restart, beyond just ending that $30 billion loss cycle for Iraq and the KRG?
Well, strategically, adding roughly 200,000 barrels per day back to the market might not sound huge in percentage terms. It's only about 0.2% of world supply.
Right. Seems small.
But perception matters. When the resumption was announced, we saw global oil prices dip initially, maybe around 2% that week. It didn't crash the market, obviously, but it definitely took some of the upward pressure off prices.
And for Iraq itself.
For Iraq, it's significant. Adding this Kurdish volume means their total national exports should climb towards around 3.6 million barrels per day. That's a serious boost for the federal budget.
Okay, let's really dig into that number. $16 per barrel. You called it controversial. It's meant to cover production and transport costs. Why $16 and why the controversy?
No, well, $16 itself was an increase, actually. It was bumped up in February 2025 from a much lower figure, around $7.90 that Baghdad had initially proposed. So it's a political compromise number.
But is it enough?
That's the million-dollar or billion-dollar question. The controversy stems from the fact that production costs aren't uniform. They vary significantly from field to field. For some of the older, more mature fields operated by these IOCs, analysts estimate actual costs could run as high as $20, maybe even $25 per barrel.
Wait, if costs are $25 and they're only getting $16 into escrow for costs, doesn't that mean Baghdad is essentially forcing some companies to operate at a loss right now? Is that the strategy? To squeeze them?
That's certainly the fear among some observers, yes, that this could be a way to pressure certain operators, maybe even push them out eventually. However, you have to look at the immediate short-term economics for specific companies.
Like GKP.
Like GKP, exactly. For Gulf Keystone Petroleum, that $16 rate, while maybe not covering all historical cost plus profit, is actually workable in the short term. Why? Because resuming international sales allows them to achieve a much higher realized price overall. They expect prices above $30 per barrel now.
Ah. compared to what they were getting before.
Precisely. Before this deal, they were forced to sell their oil on the local Iraqi market for much less, maybe $27 or $28 per barrel. So even if only $16 goes to the cost recovery escrow, the simple fact they're selling internationally again at global prices means their total revenue per barrel jumps. That's a definite positive.
So it immediately boosts their cash flow and presumably investor confidence, even with the uncertainty around the $16 long term.
Absolutely. And GKP's actions reflect that renewed confidence. You know they're listed on the London Stock Exchange's AIM market, right?
Yeah.
Well, they're now actively looking into a dual listing, specifically on the Euronext growth market in Oslo.
Oslo. Interesting choice. Why Oslo?
Well, Norway has a deep history in oil and gas, and Oslo's market has been supportive of GKP in the past. It seems like a strategic move to broaden their investor base, increase liquidity, maybe get better financing options, and perhaps diversify away some of the pure geopolitical risk associated with just being tied to Iraq.
Smart. And how did the market react to the export resumption news for GKP specifically?
Oh, immediately. And very positively. The day the news broke, GKP's share price jumped over 4.3%, hitting 217.5 pence. That was its highest level since way back in October 2022, before the worst of the crisis.
Wow, a 4.3% jump just like that, even though the deal is technically only month to month.
It tells you something, doesn't it? The market seems to value the immediate cash flow and the payment certainty from that escrow account far more right now than it fears the deal potentially falling apart after 2025. Predictability, even short-term, is gold.
And analysts are seeing this too.
Yes, Canaccord Genuity, for example, quickly raised their price target for GKP up to 250 pence. They're anticipating a significant re-rating of the stock based purely on the fact that oil is flowing and, crucially, payments are secured via that escrow.
That positive reaction, even with that brief pipeline pause you mentioned, really underlines how much the market craves some kind of stability here.
Definitely. It's valuing the political truce, however fragile it might be.
Okay, speaking of volume and milestones, we actually got some breaking news just around October 5th, right as this was all unfolding. A pretty big symbolic moment for Iraq.
That's right. Iraq announced it had surpassed 1 million barrels per day in additional crude oil exports compared to recent lows. A major milestone.
1 million additional barrels. How does that break down?
Well, it means that when you combine the resumed 230,000 BPD from Kurdistan with other existing federal volumes, Iraq's total national exports pushed up towards that 3.6 million barrels per day mark we discussed.
A significant achievement.
Absolutely. Iraq's oil minister publicly hailed it as a triumph of federal cooperation. Symbolically, it marks the end of the acute phase of the Kurdish export crisis, at least for this interim period.
But doesn't this sudden surge create potential headaches for OPEC plus pinch? Iraq's total production capacity could theoretically hit 5.5 million BPD by the end of 2025. How does this fit with their OPEC commitments?
It definitely adds pressure. Iraq is already under obligation to make voluntary cuts around 130,000 BPD until January 2026 to compensate for past overproduction. Now, suddenly demonstrating this significantly higher export capability, well, it puts them in a stronger position, but also complicates things for the group.
So the OPEC plus talks happening around that time probably had to factor this in.
You'd have to assume so. They might need to adjust quotas or expectations sooner rather than later to accommodate Iraq's increased output without destabilizing the market balance they're trying to maintain. It's another layer of complexity.
Okay, so wrapping this all up, what's the key takeaway for you, the listener? This resumption deal seems like vital, but definitely temporary relief.
It is. It immediately stops the bleeding in terms of lost revenue for Iraq and the KRG, and it dramatically improves the financial outlook for the IOCs like GKP, at least in the short term. But everything hinges on what happens after 2025. Can they reach a permanent deal? Can they resolve those underlying legal issues with the PSCs and the federal Supreme Court ruling?
That really is a delicate balancing act, isn't it? Politics, investor needs, the basic economics of that $16 per barrel figure. The $30 billion question might be answered for now, but the uncertainty absolutely lingers.
It's baked right into the deal structure. Masterclass in political brinksmanship, really.
So here's the provocative thought we want to leave you with. Keep a close eye on that upcoming independent audit by Wood Mackenzie, the one that's supposed to validate the true production costs.
That's the next potential flashpoint.
Exactly. What happens if that audit comes back and confirms that, yes, costs for many fields are significantly higher than $16? If it proves Baghdad is squeezing the IOCs, will that payment mechanism hold? Will the fragile truce itself survive past the end of 2025?
That audit report could be the trigger for the next major chapter in this saga. Definitely something to watch. Thanks for joining us for this deep dive into a really complex energy story.
Catch you on the next one.